Good morning, everybody. So this week, I just kind of want to talk about some tax strategies that you could think about. Uh, so this is going to be a kind of a high level 30,000 foot overview. Application isn't always as easy as we make it sound. And I realize that even as I try to do these things for myself. But most of my tax advice and strategy is for single member LLCs, a lot of them working from home. So today I kind of want to talk about what if you're a regular W-2 employee in a high earning position? How do you lower your taxes? Let's say you're in a multi-member, you're an investor in a multi-member closely held corporation. So that you're a traditional employee with the corporation, you also get dividends from that. So how can you take advantage of some of these tax strategies? Or there's other situations, but basically the idea here is that you're in a position where you're not able to take advantage of some aggressive tax strategies. So how do we still take advantage of those things? So what you can do is we'll just say, let's say you're making a couple 100,000 a year in W-2 wages. So what you could do is you can set up an LLC under whatever name you want, under your personal name, and we're going to call it an investments management company. And so then this company, you run all of your stocks, your bonds, high interest savings accounts. You can't do your IRAs or your retirement accounts or anything like that. And if you've watched any of my videos, you know I don't even like those things anyway. But you put all of your investments underneath this LLC. And then you also use this LLC to start looking at real estate investments. So you would, buy rental properties, or whether they're short-term or long-term rentals, Airbnbs or traditional rental property. But basically, you start going down this road of creating a property management or investments management company. Okay, so now that you have that in place, you have this LLC in place. Now we can actually start taking some of the traditional tax saving strategies. So, for example, you'll have a home office now with a home office deduction. So that can be ran through this LLC. We can turn your vehicle into an asset of this LLC, so you can take vehicle expenses. We can turn it into an S corporation because you're actively managing it. And now you are an employee of this company, and we're able to have an employee benefit package. And depending on other things that you're doing, you can start changing, just like, so everybody hears about the small business owner and how they're able to write off all these things as business expenses. It's because they are ordinary necessary business expenses, the same business expenses that a large corporation is taking. Well, if you're a traditional W-2 employee, or if you work in a closely held corporation where you are still an employee, but you also might be a shareholder, but you can't take advantage of these tax saving strategies, this is the way you could do it. You set up this LLC. Well, and if you are an owner in a closely held corporation and also an employee there, well, now you can say your ownership percentage is ran through the LLC. And you could also say, if you have authority in this company, you could also make yourself an employee of your personal LLC, make it an employee leasing company, and then you are leased to the corporation. So your LLC owns the stock, and your LLC is leasing you as a manager to this other corporation. So then you can still take advantage of all these tax saving strategies that are legitimate business expenses. So just a quick, I have probably 5-minute video on other ways to think about how you could save on taxes by creating a side LLC to operate as a business, and then take traditional business expenses against it. Okay, hope this was helpful. Everybody have a wonderful week.